No, I don't think so. They should, but they won't. It's too early to sort of fully absorb it. The funny thing is that the obstacle really are the Germans, both governing council members from Germany. But the German numbers are going to particularly concern Merkel at the Bundesbank. If this continues, then we will get 50, but I don't think in December already.
One of the other elements here is the geopolitics, and those that might be sitting on the fence might be somewhat rattled by the use of certain weapons between Ukraine and also Russia, both sides. You add that to the broader story, and there is a view that if you get a worsening of the conflict, then it worsens sentiment as well. It's not just the economic consequence here, it is the fallout for sentiment that then impacts the economy again, the double layer on top.
100%. It's easy to be very down on the European economy, but we have to, and there are many problems, but we have to recognize that we will be hit by three massive shocks over the last just couple of years that gives you to these numbers, right? We had the inflation shock, which eroded real income. We had the war, as you talked, which is sentiment, right? And the need to rearrange all the trade that we had with Russia and all the rest of it. And then the policy response, right? We have contractory fiscal policy and very contractory monetary policy for a while that is now being corrected in a sense. We can discuss whether that policy was right or wrong, but it is what it is, and it is a brake on the economy, something that the US did not have. So while we have serious structural issues, and the Draghi report you talked about it, is all correct, but there's a big cyclical element also, and most of those are probably easing up a little bit. We have very good wage growth earlier this week in Europe. So some of the real income losses started to come away. That
wage number, though, seems to be a lagged effect. We've had a lot of inflation in recent years. Labour unions want to catch 100%. Up. You know, they really want to get those increases. But how sustainable are they when you've got pressure on firms that are looking to downsize, even in core markets like Germany?
Yeah, two comments on this. And so first of all, you're absolutely right. This is not sustainable, or it will not continue at 5.3 or whatever the exact number was. But it's important because workers and wage earners need to catch up, right? So the ECB held monetary policy too tight for too long because they were worried about this. But it is the natural effect that you want to see coming through. And then the other point is, exactly as you said, it will not last because firms, we have this incredibly unusual situation after the shocks I talked about, where we have no growth but full employment. That will not last.
The inflation level doesn't seem to be so much of a boundary now. I mean, we're 2%, we're at the target for the ECB, the core is still elevated. That's not really standing in the way if the governing council are going to say, look, we still have an inflation problem. That's now rearview mirror, isn't it?
100%. The whole story about the last mile, you remember it? We have to be tight. It was a crazy narrative. It is not the story, right? So we are now.
The last mile, the last kilometre was the last conversation I had.
Oh yeah,
it shrunk.
Yeah, exactly. So the fact that we are already now down at 2 means that almost certainly over the next 12 months we will have more data points below 2% than above 2% because they will be undershooting the target unless they really start to hit the cut at a faster pace. But I don't think we are quite there. In 2025 we'll probably get a 50, I think.
Let's get into the weeds on what Madame Lagarde has just been saying, talking about the backdrop for Europe, the urgency for capital markets union. I mean, everybody agrees there's urgency, but is it going to happen?
Yeah, I think there is. I'm a little bit less negative on this. It has taken 10 years to work on this capital markets union, but it is the first time you see somebody of her stature lay out the examples, right? And it started in many ways. The Draghi report was fantastic.
I feel like I've heard every leading European in Europe comment on this. Every leading European that I know has been commenting on CMU. Who hasn't?
Right, but I have not heard top-level policymakers come in with the specifics. Here's how many we have, how it is, like she did I think the speech was very, very good. And she's absolutely right. I mean, this needs to be pointed out, right? We have a banking union, but we don't have no bank consolidation, really cross-border, as you know so far. We have the whole capital markets union, the issue of whether do you go to this 27th legal system or whatever, and I think it was interesting.
This was led by the Spanish, wasn't it? The Spanish were saying, let's get going on a mini version of this. Those who want to jump into it, opt in, they can do so. Well, at least we get the ball rolling.
And that I like very much. And you see it in Europe a little bit more now, and I think we need much more of it. We need to sort of get what is called the cooperation of the willing, or whatever you call it. So if you're waiting for all 27 nothing happens now. I mean, in that sense, you could argue, and I think you can argue, that the EU became too wide to become deep enough, right? We expand, and we get countries in who don't want to play ball anymore.